Markets have surged to the highest point of the day after myriad cues like a Fed rate cut, US seizing a Venezuelan oil tanker, Ukraine making peace moves and hopes of a resolution of India-US trade differences play off. Private banks, pharma and auto lead the gains while oil and gas stocks drag.
Near 30,000 crore rupees gushes into equity markets in November after a dip in October, while SIP inflows stay steady, but gold ETFs and bond funds see a drop in interest.
Tata Steel unveils a slew of capex focused on expanding volumes, value-added products, mining assets and low-carbon, low-cost technologies. It also inks a deal to pick up a 50.1% stake in Triveni Pellets for 636 crore rupees.
Indigo lowers its Q3 guidance following the spate of flight cancellations in December. Its chairman, however, dismisses reports of engineering a crisis or any deliberate disruption, even as he apologizes for the airline's failure.
The U.S. House has passed the National Defense Authorization Act, moving the Biosecure Act, which restricts biotech contracts to countries like China, closer to law. The local contract drug makers see this as a positive step that can drive a shift to India. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormuz Patakia. With me as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Hormuz. The markets, 3 days of losses that we saw, but finally at the day's high in the green today.
They're doing well for themselves, and the bigger question is, does that sustain going into the second half? Of course, today being the Sensex weekly expiry, so you need to take that into account as well. But for now, the index 120 points higher. Closing in on that 25,900 mark as of now. The start of today's trading session was choppy, as you can see on the charts there. But since then, there has been a recovery and a one-sided move, if you could call it that, towards the higher point of the trading range. Still seeing some supply coming in at around 25,900, but the bulls will take that, especially considering the battering that they have received over the last 3 days. Kotak, Reliance, HDFC Bank. So the index heavyweights are putting their hand up, and when they do that, it's generally a good sign for the index, at least considering the fact that we had entered oversold territories in terms of the PCR as well. So some recovery coming in from lower levels, and the broader markets as well are doing fairly well for themselves. The advance decline today firmly in favor of the advances. The lines at the same time yesterday were converging, but today they are firmly in favor of the advances.
Absolutely. So good going for the markets at this point in time. Like you pointed out, choppy start, but right now near the high points of the day. Leading the charge from the front was the private banking names like Kotak Mahindra Bank, HDFC Bank and RBL Bank leading the up move. The chart will come up for you. If you see Kotak Mahindra Bank about 3% higher, HDFC Bank, RBL Bank, all of them doing well. The other sector that also has seen a recovery is those IT names, right? The fall in the rupee was obviously positive for them. So Infosys, Wipro, HCLTech, all of them doing well. In fact, mid-cap IT names were doing even better. And if you take a look at those capital market names, they're also doing really well. BSE, Angel One, both of them 3% higher. KFin had some positive, brokerage note coming in. That stock also doing really well, 5% in the green. But let's start with the main focus of the day. Mutual fund data for the month of November was released just a short while ago. Surabhi Upadhyay gets us all of those details. Surabhi?
Well, it's been a steady showing by the mutual fund industry in the month of November. There's actually a nice pickup, almost a 20% month-on-month pickup in equity flows. So equity flows are now trending closer to 29,900 crores, almost rounded off. Now, where is the bulk of this equity money coming in from? It's actually coming in from flexi-cap funds, because if you see the large-cap category, it remains very subdued. Large-cap funds are not the top choice of investors, so to speak, because you've got only about 1,600 crores worth of flows coming in there. Small and mid-cap funds, fairly okay, about 4,400 crores each in these categories, but it's the flexi-cap category. Again, it's pulled in about 8,000 crores this time around. So that's the equity story. The other big, positive point is that SIPs are rock steady. There's no change over there. Once again, the SIP inflows for the month are coming close to about 29,500 crores. So more or less similar to last month's levels. No let-up in SIP flows. The lack of NFO activity is really telling, and that's because of subdued market sentiment. We've hardly had any big-ticket NFOs this time around. Let me quickly wrap up the numbers. So all put together, 24 new fund offerings, and they have pulled in, very modest 3,100 odd crores, which is half of what they pulled in last time. Last time we at least had 6,000 crores from NFOs coming in. So the NFO party is, pretty much it has fizzled out. let's see where else the money is going. The trend of investors moving to hybrid funds, that remains. There's a slight month-on-month dip, but hybrid funds have again pulled in close to 13,300 crores, which is not a bad number at all. It's very, very healthy. And a lot of this money, again, going into the multi-asset allocation category, which is something the industry has been pushing for. Again, MAFs, as they're called, they've pulled in over 5,000 crores. By the way, there's a little bit of a let-up in the gold ETF frenzy. Gold ETFs, as gold prices were scaling all-time highs, they pulled in close to 8,000 crores at an average over the last 2 months. But in the month of November, that number has come down to less than 4,000 crore, closer to about 3,700 crores. Last but not the least, the overall industry AUM, MF industry AUM has crossed another milestone. Now total assets managed by the mutual fund industry are in excess of 80 lakh crore rupees. So steady showing and some pickup in equity flows, along with sustained flows coming into the multi-asset category.
Surabhi, thank you for that update there on the mutual fund data for the month of November. Steady as steady can be. Some good growth month on month, and the SIP number too staying above the mark of 29,000 crore, and that too has had some bearing on the markets. So it's a positive sign there that the flows continue to pour in. Now, pension regulator PFRDA has issued revised investment rules for pension funds, allowing for more diversification. Yash is here with more on this. Yash, tell us more.
Well, Horma, this is quite unprecedented for PFRDA as a move itself. It has gone ahead and expanded its investment universe, not just in the same asset class, but added another asset class altogether. I'll speak about the first thing where PFRDA expands its investment universe in the same asset class. So far, PFRDA was allowed to invest in Nifty 200 companies. That asset class has been expanded to Nifty 250 companies, which means about 50 companies getting added to that universe. Also Sensex 250 companies, and the companies which would be different from Nifty 250 when it comes to Sensex 250, also those companies get added when it comes to the new investment avenues for PFRDA. This is about the same asset class. Now, as I said, PFRDA has also expanded into a new asset class, and this is gold and silver ETF. CNBC TV18 had reported on this particular move, expected to be taken place, and it has been taken place, where PFRDA has put a new limit of up to 5% when it comes to a new asset class, which will also include gold and silver ETF. So this entire up to 5% is not reserved for gold and silver ETF, but a part of it could go towards gold and silver ETF. Apart from gold and silver ETF, in the same category of that up to 5%, there are other investment avenues as well, like commercial mortgage-based securities, units issued by real estate investment trusts, that is REITs, also InvITs and SEBI-regulated alternative investment funds.
All right, Yash, many thanks for taking us through those details. But on that note, it is time for us to head into a short break. More news and updates coming up on the other side. Stay tuned.
"26 years of CNBC TV18.
Welcome back. You're still with us on Business Lunch. Let's bring you an update on the Indigo crisis. The airline is still grappling with disruptions and cancellations on account of planning failures related to the implementation of new pilot and crew duty norms. Several flights have been cancelled from Chennai and Bengaluru today as well. Meanwhile, CEO Peter Elbers has been summoned by the DGCA. He has to submit a comprehensive report on the recent operational disruptions by 3 p.m. Indigo chairman speaks for the first time after the fiasco, claims that Indigo engineered the crisis are incorrect. Listen in.
There are some allegations that are untrue, that Indigo engineered the crisis, that we tried to influence government rules, that we compromised safety, that the board was not involved. These claims are incorrect. Indigo has followed the pilot fatigue rules as they came into effect. We operated under the new rules throughout, both in July and in November. We did not attempt to bypass them, nor did we do anything that negatively impacted our unblemished track record of safety.
Well, moving on, Ola Electric's promoter entity, ANI Tech, faces another downgrade, and this time S&P Global has downgraded that rating to CCC minus from CCC plus with a negative outlook. Ritu is joining in with more on this. Ritu.
Well, after Moody's downgrade last month, now S&P Global Ratings has also downgraded ANI Technologies, which is the parent company of Ola Cabs. Now, S&P has lowered the company's issuer credit rating from CCC plus to CCC minus with a negative outlook. This, they say, reflects weakening liquidity and the risk of a financial covenant breach in the next 6 months. Now, S&P warns ANI's cash and equivalents are expected to fall below 200 crore rupees in the fourth quarter of this fiscal. And this is critical because ANI is required to maintain 40% of its term loan B in cash, which amounts to 240 crore rupees. Now, S&P expects that they will likely breach this covenant when it is tested on the 31st of March next year. Operating losses also continue to weigh on them. S&P projects that ANI's adjusted EBITDA loss will rise to 590 crore rupees in this fiscal and revenue could decline by 25 to 27%. At the same time, its market share in India's four-wheeler segment has fallen to 20 to 25%, which is down from more than 50% just 2 years ago. Now, the agency notes that ANI Technologies also has limited ability to withstand continued cash burn without additional capital infusion, unlike its competitor, say Uber, which holds more than $6 billion in cash. So S&P notes ANI's options to increase liquidity, they too are limited. It has historically relied on equity funding and there's limited record of bank financing. ANI also, keep in mind, holds a 3.6% stake in the listed entity Ola Electric, which is now valued at around 450 crore rupees after taxes. But selling that stake is also complicated by the fact that Ola Electric shares have been trading at an all-time low. Meanwhile, ANI has delayed its IPO plans repeatedly as well, and they hold nearly 19,500 crore rupees in compulsorily convertible preference shares, which represents about 95% of the adjusted debt. And S&P says if the IPO deadlines are not extended, the preference shareholders could exercise their exit rights, and that will add immediate financial pressure on the company.
All right, Ritu, many thanks for those details. Let's take another short break on that note. More news and updates on the other side. Stay tuned.
"26 years of CNBC TV18.
Welcome back. Let's now get you some updates on the trade negotiations between India and the US. Parikshit is joining in with more on this. Parikshit.
India and the United States continue to negotiate a bilateral trade agreement, but there is no clarity on whether this deal can be achieved by year-end. Commerce Minister Piyush Goyal has already said that trade agreements have many diversified angles, many dots have to be connected, and we do not negotiate deals with deadlines. While Deputy USTR Rick Switzer and Assistant USTR Brendan Lynch are in New Delhi for talks with Commerce Ministry officials, any final decision will be a larger political call. The decision will have to be eventually taken by President Trump and Prime Minister Narendra Modi. While negotiations have been in advanced stages, both sides are yet to reach a common landing zone on the average tariff rates. While India has made a very good offer, which USTR Jamieson Greer has himself spoken about, it is President Trump who now has to sign off on it. In fact, Mukesh Aghi, who's the president and CEO of US-India Strategic Partnership Forum, he told CNBC TV18 that the recommendations have been made to the White House and the recommendations have gone earlier as well. And therefore, President Trump must now take a decision. However, Trump's message on raising tariffs on Indian rice and USTR Jamieson Greer's remarks about India resisting imports of row crops, meat and dairy indicate that the White House may still be pushing for more agri-exports as part of the deal. And this is likely to complicate talks which are in the final phase. India has mounted a multi-pronged offensive to convince the US about the trade deal. Regular talks are on between the USTR and the Ministry of Commerce, the Ministry of External Affairs and the State Department, and also between top officials in the Indian government and the White House. The Indian ambassador to the US is also regularly meeting US lawmakers to drive home the point that the US-India partnership is extremely important for both nations, and the India energy trade with the US has increased 70% year on year and will only increase further.
All right, Parikshit, many thanks for those details. And the markets will keenly be watching what comes out of this India-US trade deal. But the Sensex and Nifty firmly in the green. The Nifty at above 25,850, slightly off the high point of the day. But the broader market's doing much better. Mid-cap about 0.8% in the green. And the private banks doing really well, leading the charge from the front. But with that, it is a wrap on this edition of Business Lunch. From Horaz and me, goodbye and many thanks for watching. Mid-cap Radar coming up next.
"26 years of CNBC TV18.